what we're seeing now is kind of it's almost a parody of the 2008 crisis, where cryptocurrency was born from the reaction to the 2008 crisis. And instead of creating this alternate world that they claim to have done, they just made kind of a 19th century unregulated, unguarded version of the same things that brought down the banking system back in that year. So whether it's this time or next time, at some point, all of these thousands of cryptocurrencies and speculative assets that are duct taped together, that are unregulated, that are run by God knows who, at some point this is going to be the big one, and it's just a question of whether this time is it.
Right. Catherine, though, my question, though, is there spillover effect? Is there anywhere in the crypto space, whether that be a stable coin like Tether, that could crash that would have spillover effects on the greater economy?
Well, so, there's a couple of things to consider. So, first is deals are slowing, prices are down, valuations for startup in the space is repricing, total crypto market cap has fallen. There's certainly a lot of stress on companies, so layoffs are happening. So I don't want to sugarcoat what's happening. But at the same time, I don't think this really marks the end of crypto from my perspective. And there's a couple of considerations, First, crypto's been around for over a decade. This is the third downturn in that period. So a market downturn in crypto is nothing new. We're actually just coming off of a bull market with a lot of talent inflows and infrastructure built. Venture activity is still pretty healthy. Companies are still getting funded, and builder sentiment is still very high. This is probably one of the first correlated, macro downturns, and I think it's probably because the bull run was kind of caused by macro factors. But I don't know that, in my opinion, this spells the end for crypto at this time.
Well, but does it have to be all or nothing, Catherine? I mean, crypto, and I'll just take Bitcoin specifically, has never really existed outside of a bull market. So I question how much it makes sense to look at other crypto winters within a bull market. Can you give me a good reason why Bitcoin won't go to 10,000 or even 5,000 over the next few months if it went from 60 to almost 20?
I can't predict the prices, and who knows, it could go up or down, and we all know that crypto assets is pretty volatile. But, I think sitting here in 2022, you have more institutional interest, you have sovereign nation interest. Bitcoin is, legal tender in more than one country. So I think there is probably enough interest to at least, I don't know. I mean, look, I can't predict prices, right? So, but I think the point of it going to zero at this point.
The price point is pretty important, particularly to retail investors, many of whom were sold on this idea that the technology is so great and it's so scarce. I mean, that's what Saylor was saying this morning. Hey, look, it's a great computer network, and therefore the prices are going to hold up. I wonder why this is different. I brought this up yesterday from open source, where people said open source is going to rock the world of software. It's going to take out the Microsofts of the world. And open source did rock the world of software, but it didn't take out Microsoft. Microsoft adopted it. Might we get to the point where the financial system adopts blockchain technology, but these individual cryptocurrencies continue to come down in value and don't go back up?
So there's a couple of differences. Bitcoin, I think, is just one asset in the broader crypto ecosystem. And so Bitcoin, in my mind, is kind of, digital gold or maybe alternative store of value. And so, Bitcoin is one asset, but there's still so much happening in the crypto ecosystem that is also outside of Bitcoin. So, for example, like Ethereum, I think, is strong. The ecosystem is healthy. There are so many things and subcategories being built within Ethereum. So aside from just DeFi, there are NFTs, there are DAOs. And so there's so many subcategories. And I think a lot of the value and activity and developer activity and usage and applications are built on other types of protocols or other types of ecosystems. So there is Bitcoin, obviously, that's a big part of the crypto ecosystem, but there's also a lot of other things happening that are building on top of Ethereum.
Maciej, I want to get back to my first question. That is on spillover effects. I didn't hear you answer that. Do you think that there is any part of this market that could hurt the greater economy or the greater markets outside of crypto?
I think we're finally at a stage where crypto is big enough that it can have spillover effects. Like, I think the thing to watch is the stable coins. If one of those collapses, particularly Tether, which a lot of people, including myself, have argued is built just on a pyramid of fraud, then that is going to be a big enough crash to collapse certainly all of cryptocurrency, and it will have spillover effects outside of it. But you have to remember that the whole idea of spillover effects was supposed to be anathema to cryptocurrency. It was supposed to be completely decoupled from from government policies. It was supposed to be, these centralized entities, these exchanges were supposed to have no impact at all on what was fundamentally a populist and decentralized, uncontrollable protocol. So this difference between what was promised and what was delivered is something that is a consistent theme in cryptocurrency failures.
Right. That's a good point. Catherine, final question to you. I can understand why you want to get away from the price talk. Let's talk about the technology behind cryptocurrencies. Michael Saylor this morning said that Bitcoin is programmable. Can you give us an example of what innovation looks like that's currently being used, or one of the most innovative companies that is not an exchange or a marketplace?
I mean, there are so many examples of companies that are built today that wasn't even possible 3 years ago. And I just really want to hammer home the point that there is so much infrastructure being built. And just even in the short 3 years, there's just so many companies that are now possible, business models that are possible that genuinely were not possible before. So anything NFT related, ERC 721 standards are so much more mature. Market sizes for NFTs are exponentially bigger. Protocols can use Zora to create smart contracts instead of inting a new one. So developer tooling is so much more mature. Infrastructure is awesome now. And so one of the really big trends, at least in the crypto space that I'm seeing, is NFTs. And that's one of the rise of music NFTs. So really, how do you empower musicians to kind of bypass the middleman, which is, recording labels, to kind of sell directly to their fans? I think for the creator economy, which is obviously a really hot and rising topic, I think that can really be a game changer. So there's so many use cases depending on who you are. I can talk about this for hours. That's just something that's top of mind for me.
Catherine and Maciej, thank you so much for being with us today.
Thank you.
One more name getting hit by the crypto sell-off, of course, is Robinhood. Atlantic today downgrades to sell this morning and forecasts an even bigger decline in usership ahead. Shares down 60% since January, as you well know, $7 a share now. Stay with us.